We can start. Thank you all. Good evening to all of you. And I think today we are having the first session on the topic, which is we cannot say it's a part of our BFSI, but it is a part of our infrastructure. And we welcome all for this special webinar organized by the BFSI board and WRI on the topic of electric vehicles, emerging business and finance model. Sri Arun Krishnan, Program Coordinator, Climate Finance, WRI India, and Ms. Sharbari Patki, Program Head of WRI India, are the speakers, along with the experts from Coexec Chennai. Before we start their introduction, let us begin with an auspicious note with the Institute Anthem.
सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय.
We welcome our speakers for today. First, starting with Arun Krishnan sir. Sir is the Program Director for Climate Finance at WRI India. He has over 15 years of experience in deal advisory, climate and project finance, and public-private partnerships in urban infrastructure, transport, and airports. Before joining WRI India, he led the India Regional Program of the Global Innovation Lab in Climate Finance at Climate Policy Initiative, where he developed innovative climate finance instruments. He also led CPI's India's urban and transport work. Previously, he worked in consulting, assisting governments and the private sector in project financing and policy development. He has also been a visiting faculty member of IIM Kashipur and IIM Shillong. Sir holds an MBA from the prestigious Indian Institute of Management, Ahmedabad, and a Bachelor of Engineering from Anna University, Chennai. He also holds the GRP SCR certification. He is committed to advancing climate action and sustainability at scale. He has mentored over 1,000 students and enjoys trekking, traveling, and do-it-yourself projects, including building desktop PCs. We have another speaker for today, Madam Sharbari Patki, who is the Program Head, Electric Mobility with the Sustainable Cities and Transport Program at WRI India. Here she is responsible for organizations' engagement in freight projects, including freight electrification efforts. She is also engaged in efforts for comprehensive and easily accessible electrical charging infrastructure, which will facilitate faster adoption of electric vehicles. With professional experience at the intersection of policy research and project management and project delivery, Madam's work includes efforts for forming collaborative efforts between academia, industry, and policymakers in areas critical for development of electric vehicle ecosystem in India. Before joining WRI India, Madam worked in engineering consultancy, leading real estate developers in India for engineering design and master planning of residential and commercial development projects. She has also been actively involved in process standardization, strategic cost optimization initiatives. Madam holds a bachelor's degree in electrical engineering from Mumbai University and a master's in energy system engineering from IIT Bombay. Besides being an avid Indian music listener, she is also having a keen interest in teaching. With this, we welcome both the speakers for today, and I request Arun sir to start our session on this important topic for today. Over to you, sir.
Thank you so much. I just want to see, because we are not able to see the expert people from COSET, Center of Excellence Zero Emission Trucking, IIT Madras.
I think
It would be Karthik Atmanathan.
yes, they have all joined, madam. I think they are in the part of this.
Yeah. Then probably I will take a minute. Can I take a minute, sir, to go and
Yes, yes,
introduce?
please, madam.
Yeah, great. So it's our pleasure to have Professor of Practice, IIT Madras, Karthik Atmanathan. Sir comes with industry veteran experience, almost 25 years into industry, more than 25 years into Ashok Leyland. He led the profit and loss for Ashok Leyland electric mobility business. Rather, if we say that he was the one who built Ashok Leyland electric bus vertical, that will be the apt thing to say. Along with coming from a hardcore industry profit loss expertise, technical expertise, he is also extremely effective working at the policy intersection. He is also fellow at Principal Scientific Advisors Office to Government of India, where zero emission trucking work happens under his guidance. I'm not still able to see the other people from COSET. Selva sir, have you joined?
Yes, I'm online.
Okay. So I can see Selva sir. Selva sir also comes with 30 plus years of industry experience, and he has been instrumental in getting technical things roll out, like skilling, which is required to build any ecosystem during technology transition phase. Plus, he is working very closely on solving critical problems with respect to finance, getting pilots on roll, and we will hear more from them. Pleasure to have Professor of Practice at IIT Madras, Mr. Karthik Atmanathan, and Selva sir from COSET. Arun, back to you.
Okay, great. Thank you so much, Dibendra and Sharvari. It's a pleasure to address this audience. So for us, it is a little confusing because we are addressing an audience, but the audience is on YouTube, right? So for Karthik ji and Selva ji, if you can look at the chat, there is a YouTube link there. Okay, you open that YouTube link. It is basically ICMAI's YouTube page, and I can see 88 people are watching right now. There is some lag between what we are talking and what is going on there. And I've asked Kapil to put it in the chat in the YouTube that if anybody has any questions, please type it out there, right? So that we can address the questions. So Kapil, please be on top of that, right?
So Q&A will come through the typing part, is it?
Yes.
Okay, this is going to be really new and weird. We'll see how it goes.
Yeah. Anyways, I think okay. Let's get started. So, Chandana, if you can project the screen.
Just one question, Arun. How would we know if somebody has questions in the middle? So they will keep chatting.
Yeah. So Kapil is on it. He's monitoring the YouTube feed, and he will note down any questions which are being asked. Right.
Okay.
Okay. Great. All right. So we begin with an introduction of EV financing. We begin with opening remarks. So opening remarks will be by Karthik ji. So over to you.
Okay. So good evening, everyone. So I hope your day was not too taxing. So the context today is electrification of trucks, and we've been working on this for the last 3-4 years. Not just technology side, in fact very little on the technology side. We've been doing some work on new technical requirements which are India centric, because we cannot take things from China or Europe and implement directly in India. There is a significant difference in the way trucks are used in India. So and even the types of trucks are very different in India. So those technical work that we have been doing, a lot of the work we've been doing in partnership with WRI also. But apart from that, we have been working more on the money part, because this is a commercial vehicle. The buyer of the truck has only one purpose for that truck, and that is to make money. So there is no other emotion, there is no other purpose. It's a way of making profits and a livelihood for the owner of the truck. And the truck market also, we all know, is very scattered. I think 80% of sales goes to fleet owners who have less than 5 vehicles in their fleet. So it's a very scattered market, but this is true globally, even in the US, etc. There are not too many people with too many trucks in their books. So the whole thing is about money. And as on date, you forget about everything else that has been published and that has been talked about. But as on date, if you catch the market, anywhere between 20 to 30% of the sales of truck. I think this year India will finish with about 350,000 trucks or 400,000 trucks. And these are all trucks between 12 and 55 tons. So out of this 3 lakhs to 4 lakhs trucks, already 60,000 to close to about 80,000 trucks, they need not have bought diesel trucks. They could have bought electric trucks because it is more profitable already for those fellows. So it is not one single story for all the truck guys. It depends a lot on what truck is being used for what purposes. And as on date, 20 to 30% of sales, it makes money sense to electrify. So why is he not electrifying? There are various reasons. And one of them is that the finance sector has not been aware and engaged over the last 3-4 years as much as others have been. So slowly this is changing, and so it's a pleasure to be in touch with a whole lot of accounting and costing professionals like you who also drive management decisions. So the bottom line is, if your company is using trucks for transporting your output or your input or both, you will do well to assess whether there is cost to be saved or profits to be increased by moving to electrification. And this, you have to do it in a sensible manner. You cannot just give out a contract. You will have to be part of it as a partner. But there are ways of going about it, which Arun and his team will also tell us about. But this is the story as of now. We have a good chunk of trucks which are going to be profitable, and they are not getting electrified for other reasons, not money. So money is there to be made for these trucks if they operate with electric trucks. So that's a kind of context I would like to set. And I would request you to listen to the fundas being given from this point of view, to see whether you in your company or your business have an opportunity to save money or to increase profits. I will leave it there. I'll hand it back to the WRI team, and good luck with this session.
Thank you so much, sir. I'll just give few seconds to bring the presentation. So what we are going to do today, we will have 2 specific deep dive sessions, one on electric buses and one on zero emission truck. But before we actually deep dive into these 2 vehicle classes, we want to lay out some ecosystem background as a sector, because we have seen electric mobility success story mainly on the road at a 2-wheeler level. Then we will also very quickly cover what are the success enablers before we deep dive, and we have a dedicated session from 5:45 to 6:15, because 6:15 Karthik sir has to leave for another call. We want to take that opportunity and tap on to his experience industry experience as well as experience in the policy space for zero emission truck. And later we will deep dive into them as a subject, because there will be so many myths. I'm fairly confident that people will start asking questions, and those myths can be busted before Karthik sir leaves the call. So next slide. Very quickly, the common, I don't think that is question anymore in most of the people mind, but I want to take benefit of doubt, and this is why we need to shift to EV. I think each one of us is aware about the air pollution at a city level. If we get top 50 cities globally, top country in that polluted city list will be India, which is something we need to be worried about. At the same time, geopolitical incidences like war have very clearly shown us how vulnerable we are when it comes to our energy security. We understand that we have already diversified our energy input from 9 countries pre-COVID to almost 40 plus countries post-COVID, but still one Strait of Hormuz getting shut down is creating issues when it comes to energy for the country. In terms of operating cost, I think Karthik sir have already well put this, that this is not an emotional decision for logistic service provider. This has to be a business decision. And this is the trend we have seen when it comes to electric vehicle, because battery costs have fallen significantly with more and more solar coming into grid, the energy will be cheaper. So the operating costs are declining. Fuel prices volatility, we have seen that. Just 2 sessions and we have jumped $40 per barrel. And we are going to face the music soon at a country level. Logistical efficiency, I think that is something I will leave it to COSA team, because we have seen amazing turnaround time benefit when it comes to comparison between diesel truck and electric, and why so. We are going to ask Karthik sir in our next session. In terms of technology maturity, we know that as a technology has already proven that it's ready. And in terms of near-term scalability also, electric vehicle becomes very great choice when it comes to zero emission vehicle. And hence, we should focus on electric vehicles as a shift. Next. What has actually caused this? It's interesting to see. This is not a transition which has automatically happened by industry. In electric mobility, this is a transition which is a policy-led transition. In 2013, we started with this journey with National Electric Mobility Mission Plan, with a target that we need to have 6 to 7 million electric vehicles by 2020, and we reached pretty close to that target. We already have 5 million plus electric vehicle already on road for last 1.5 year now. I don't know the latest count, but from that 2013, today we are at 2026. We have seen multiple policy to push electric mobility, whether it is GST benefit, whether it is exemption for road taxes or road permits for electric vehicle, incentive programs like FAME 1, FAME 2, FAME 3, which is the PM e-drive, or production link incentive programs like for advanced cell chemistries, auto component production link program. So if you put together what money have been poured by central plus state together in case of electric mobility, we are talking about practically 1 lakh crore. Various incentive program plus PLI schemes plus incentives by state put together. So commitment of government towards electric mobility is pretty clear through the policy signals. Next slide. And these are the mapping of those incentives, how it has been done, and what's the scale of impact. just in FAME 1, just to give one example, FAME 1 was almost 343 crores. FAME 2 was 10,000 crore. PLI for ACC, which is not noted here, but PLI for ACC was 10,000 crore. PM E-Drive has money attached. 2,000 crore has been earmarked for charging infrastructure in PM E-Drive. So we have fair amount of signals from government, and that we have seen them percolating down at state government also. There was a time when it took 14 months for first state government to create its first EV policy at a state level. Karnataka was the first one. In next 14 months, almost 17 states have notified their electric mobility policy. The percolation of policy is that strong when it comes to electric mobility. Next. I think we can share this deck so that they can go through it. Again, critical mineral, one of the pain point, we know that we do not have realized capacity of critical minerals in India. We have inferred resources because we have now started paying attention to them, and we started kind of exploring that opportunity. But critical mineral has been on the radar. Initiatives like Kabil, National Critical Mission, Mineral Mission, all of these are very clear indications by government that they are serious about this particular topic. And we acknowledge that there are certain issues, because if we consider in terms of critical mineral, upstream, downstream, and midstream, these are the three buckets. Almost 75 to 80% of the, of the supply chain is controlled alone by China. We do not have, as on date today, refining capacities. Even, let's say, even if we have critical mineral in-house, we do not have refining capacities in-house. So we are dependent on China, and that is something government is acting on. It's a uphill battle for all of us. This is the demand side of the story. But at the same time, there are supply side regulations which are pushing vehicle manufacturers very clearly towards zero emission vehicle. CAFE norm, which is corporate average fuel efficiency norm, one of the strongest regulatory lever to push overall fleet economy itself at one notch above, is the CAFE norm. And to simply put, imagine today if a particular manufacturer is creating 100 vehicle, and at a fleet level, the CO2 emission of that manufacturer is 113 gram per kilometer at a fleet level. The next versions of CAFE are going to become stronger and stronger. Just to give example from Europe, by 2035, the CAFE will ensure that all the cars sold in Europe will naturally become zero emission vehicle, because there will not be allowed CO2 emission per kilometer. It will be like 0 gram CO2 allowed per kilometer. So this is one strong regulatory guideline. I think for this, I will hand it over to Arun for a green deposit framework. Arun?
Yeah. Okay, great. So I, because you're part of the Banking and Financial Services Board of ICMAI, so I suppose most of the members in the audience understand the financial sector fairly well. And you would also know that the RBI brought out this framework 3 years back with the idea that there will be a small negative in the interest. I mean, if for example, the prevailing market interest is 6%, then green deposits can carry a slightly less interest rate, a few basis points, and it will attract depositors from the market. The reality has not worked out that way, as you might know. It has not raised that much in funding, hardly 3,000 crores. And as you can imagine, because the the depositors in public sector banks especially are retirees or people on very fixed income, right? So they would want a better returns on that income than what a green deposit is offering, and therefore this has not been very successful. But whatever has been raised has been deployed into mobility and solar power. Next slide. You might be aware of the sovereign green bonds framework. The government had brought it out shortly before issuing green bonds worth $2 billion. And that was quite successful because one, it was oversubscribed, but also they were able to get a greenium of almost 10 to 20 basis points over a similar non-green bond, right? But the greenium would have disappeared by now, as we are seeing from market issuances. But the sovereign green bonds framework is useful in the sense that during that time when the government has not announced any taxonomy, what we call climate taxonomy, this gives you a proxy for a taxonomy. What is a taxonomy? What are the sectors which can be considered green, sustainable, right? That banks and financial institutions require guidance on. And here you have all these sectors which are listed out in a document released by a government, and it includes clean transportation, right? So that way it was useful, and it led the way to next slide, please. The climate finance taxonomy. You know that there is a draft climate finance taxonomy. It has not been notified yet, but still it is a very powerful signal from the government that these sectors are eligible for as climate financing, right? So not just for domestic investors, but for international investors especially, it gives immense clarity on, okay, I'm going to invest in mobility. Is it going to be considered green or not, right? So that clarity you obtain by this climate finance taxonomy, right? Next slide, please. Yeah. So various states, Sharvari, maybe you can explain this.
Sure. Thank you, Arun. So when it comes to policies, I think we have spoken enough, and each policy, what we just mentioned, Karnataka was the first state to come up with their own EV policy after the national policy was done, and now 33 states and union territories have already announced. Most of the state have gone through the overhaul of. So state like Maharashtra have third version of updated EV policy. So each one of the state is considering electric mobility as a sector seriously. Next slide. And it also shows that how manufacturing landscape have changed. So e-mobility market size by 2030, just if we assume that 30% EV penetration, because we feel that for some of the vehicle classes it might be higher, some of the vehicle classes it will be lower. At an average, if we say the target which is given by Niti Aayog, which is 30% by 2030, we are practically talking about $250 billion market as a overall, and we are talking about 7 billion only in EV batteries. And we had handful number of vehicle manufacturers 5 years back, but now you can see very clearly how the pan-India vehicle automobile manufacturing cluster, because one cluster we had in Gurgaon, like near Delhi, one cluster we always had in Maharashtra near Pune, Chakan, then there was one cluster in Tamil Nadu. But now, in addition to these clusters, there are some new clusters also which are getting developed. So electric mobility transition is also allowing few aggressive states who are creating favorable policies to create this automobile cluster, which in turn means new jobs getting created in that respective state. Then what are the technology enablers? I think we spoke about battery tech, and if we start mapping from 2019, where it was at almost $180 per kilowatt hour, to today we are already at almost $100 per kilowatt hour. And as per Goldman Sachs, we are expected to go towards 80. Of course, this number will keep changing slightly depending upon the geopolitical situation. But it's not only the price, it is also the energy density. We have seen these different battery chemistries evolving to have higher and higher energy densities. In short, how much energy you can pack in 1 kg of a battery. So that is also increasing. So both way, energy density is increasing and cost is coming down. So it's like a double benefit to us as a consumer, to us as a user. In terms of infrastructure enable, we feel that EV charging infrastructure is not there or complete bottleneck, but I want to focus charging infrastructure from truck and bus point of view, being the topic of today's deep dive. I think I will reserve that particular. I'm going to park this thing to ask a specific question for Karthik sir, and I'm going to quickly close. I think I'm overshooting already by 2 minutes. In terms of passenger segment, the numbers have been significant. In case of electric two-wheeler, there are already almost 35 lakh two-wheeler. And another major success vehicle class is E3-wheeler. Even if we remove electric rickshaw, like e-rickshaw, which is the lighter version of three-wheeler, which works not necessarily always on lithium-ion battery. There are old battery chemistries. In that case, also E2-wheeler and E3-wheeler has been a good success story. And in case of electric three-wheeler, it's a very clear business case. So market have picked up because it's a good business case, and that is what we have to draw learning from when it comes to commercial segments like bus and trucks. Passenger segment, as we have seen in that map, we had handful number of manufacturers few years back, and today we are happy to show that these numbers have increased, and there are now good product which are equivalent to ICE are available in electric vehicle category, all categories. I think this is something which we can just run through very quickly, showing that electric vehicle are actually making business sense. This is just a quick example. Let's hold it here, like electric small vehicle. For your imagination, we are talking about Tata Ace equivalent, four-wheeler, which is smaller in nature, which is mainly used for your last mile delivery, which you see roaming around in your vicinity. And we have seen almost 2% penetration. And if we do total cost of ownership, so we understand the electric vehicle cost, upfront cost is almost 2 to 3 times than ICE vehicle. But when it comes to per kilometer operation cost, if we spread it over the total life of the vehicle, total cost of ownership, TCO, for electric vehicle is lower than diesel, even at second year. The break even happens at second year. For some of the vehicle category, that break even goes as far as fourth year as well. But in terms of total cost of ownership, these vehicles are now making business sense. Can we just run through? Yeah. Okay. Arun, back to you for auto finance. If we can close this in next 5 minutes, we can, no, 10 minutes, then 6:45 to 6:15, 5:45 to 6:15, we can have a dedicated question answer with Karthik sir. Arun, back to you.
Okay, perfect. Thank you. Okay, thank you, Sharvari. One of the folks has asked a question about whether input tax credit is can be used, is allowed for this thing on vehicle purchase. So the answer is, and this is from Selva sir, is that it is not allowed if the vehicle is used for personal use, even if it is used partially. In our case, trucks and buses with capacity more than 13 passengers are eligible for ITC. there is no change in GST policy except for rate of GST for battery electric vehicles, which is 5%, right? Okay, so in any case, Selva sir will answer more questions, subsequently, and Karthik sir as well. I request you to type out as many questions as you can, as you want to ask on the chat window, right? We are monitoring that. Thank you. All right, now for auto loans. So the auto loan book in India is shows some interesting patterns, right? For example, the two-wheelers, which is more riskier, the profile of customers which take out primarily two-wheeler loans, although there's a huge overlap with four-wheeler loans, there are some standalone two-wheeler loans as well. So that is primarily covered by NBFC. I don't know if you can read this graph, but the green color is the coverage of NBFCs, which is the majority of the loans given out in this sector, right? Next slide, please. Yes, for four-wheelers, okay, you can see that in two-wheelers, public sector banks are especially absent because they are quite risk averse, right? But in four-wheelers, you can see that they are the orange strip is private banks, the blue strip is PSU banks. They become active because here the perception is that the borrowers are more creditworthy, right? Now imagine something similar in in heavy duty vehicles, right? So you have the heavy duty trucks, you have the heavy duty buses, the private sector buses I'm talking about. The profile of borrowers would be kind of similar to the closer to two-wheeler than four-wheeler. Okay, the large majority of the borrowers are own less than five vehicles or less, while a small minority own a larger fleet, right? So the minority which owns the larger fleet, the bigger logistics companies, the bigger bus companies, obviously, as you can imagine, they would find financing easier, not just for existing diesel vehicles, but also for future electric vehicles, right? A lot of them are, in fact, borrowing against their balance sheet for electric vehicles. Now, moving to the smaller fleet owners, there the financing challenge is companies like Sundaram Finance, Shriram Transport Finance, and so on. They have mastered, truck financing, right? So you may be a small fleet owner, but you will still get, based on your track record and based on your relationship with the financing firm, you will still get financing, right? Now the challenge is, how do we actually extend this to electric truck financing? And there are ways and means of doing it, even though electric trucks are much more expensive. Okay, next slide, please. This is fine. I don't need to cover this slide. Go to the next one. Okay. EV finance right now is growing, right? So just like electric vehicles themselves are growing, EV finance is growing, right? So when it comes to two-wheelers and four-wheelers, for two-wheelers, the same banks, same NBFCs, which finance your usual two-wheelers, the fossil fuel two-wheelers, are also financing electric two-wheelers. But on top of that, you have some new age financing firms, which are based on the partial risk sharing facility, which has been created by SIDBI for electric two-wheelers, so electric vehicles in general. They are able to cover financing of electric two-wheelers. Electric cars, passenger vehicles, four-wheelers, are being positioned as a luxury segment, right? Or at least, not the bottom rung of cars, but compact SUVs and above, right? So that way, there is no challenge in financing them. Electric buses, because most of the government buses are being underwritten by the payment security mechanism, which will be touched upon subsequently. Again, no problem in financing using project financing. Now the challenge remains that electric trucks and electric buses in the private sector, right? Which is facing, or where finance needs to grow. Okay, and how do we do that? We'll come to that subsequently. Next slide, please. Okay, I'll move on because of paucity of time. Okay, Q&A session. We had that. Okay, never mind. Then we can go back to the previous slide. Okay. Let me summarize some of the challenges, right, between ICE vehicle. ICE is internal combustion engine, which is diesel or petrol, and EV vehicle, right? So first is the what is the focus of the bank or the financial institution, right? When it comes to ICE vehicle risk is well known, and the underwriting of the risk is dependent on how good the borrower is. Okay, whether the borrower has a credit history, whether they have defaulted on any loans and so on, right? For EVs, the risk is not just the borrower, the risk is the emerging technology as well. Although the technology has matured to a great extent, and a lot of you might think that the battery and so on is still evolving, but actually it has evolved to a fair bit of maturity, right? So the technology risk is really not there. The technical people will be able to explain that better than me. Loan to value, because the value, the capex for electric vehicles is that much more. The loan to value will obviously be less, right? So 3x, 4x the capex of a diesel truck, an electric truck, you can't underwrite the entire value or even 90% of the value like you would a diesel truck. So the loan to value will be comparatively lesser. Tenors are evolving. Okay, loan tenors initially matched with the diesel trucks or diesel buses, but now what the forward-thinking financial institutions are doing is that they look at the AMC, they look at the guarantees given by the manufacturer, and they -1 from that, right? If the manufacturer is giving an AMC for 10 years or a guarantee for 6 years, they -1 and they give a tenor of that loan because the manufacturer themselves are so confident on their product, right? Interest rates, there is actually not much of a difference in interest rates, except for the fact that, okay, maybe a slight premium in technology risk might be added. Residual value certainty is certainly something which is still evolving. You don't know the end value of the product, whereas for a diesel truck or a diesel bus, there is a existing market, right? Tomorrow you can sell it and you know what value you will get for that, right? Whereas for electric vehicles, it's still not known, which is why things like residual value guarantee, etc., becomes important, which we in WRA are also working on. Battery risk, technology risk, I already spoke about, but there is a concept called battery Aadhaar which is coming, which is similar to a chassis number or an engine number, but much more, right? So it not only identifies the battery pack uniquely, but also provides technological support for said battery pack, right? So battery Aadhaar is a evolving policy. You will see a lot more about it in the coming year. Warranty alignment, I mentioned previously that financiers are looking at warranty in order to get cues about what tenor they should provide for the loans, right? So yeah, this is a major difference between ICE and EV vehicles. But now let's go to the Q&A session because the IIT Madras experts are here. Please do type in your questions. I see a lot of CMA numbers, which is great. I mean, you're showing your attendance, but please provide your questions as well.
Yeah, given that there are no questions yet, probably you can continue the session and we can see if they can come up with questions for another after 5-10 minutes.
Okay. I see one question.
No, in the YouTube channel, as of now, there was one question on the income tax, the input tax credit, and that's answered. Right now, there's only what is the role of practicing cost accountant on this evolving business. I think that's the only other question. So we can probably continue, and then after there are more questions, we can take it up all together. I'm monitoring the YouTube.
I think then should we start with the EVA session? Chintan is here.
Sir, the way in which we have arranged the session is next is the 15-minute deep dive for bus, post that deep dive for truck. So if we continue, then thing is we will continue for next 15 minute or 30
I'm
minutes.
guessing, yeah, I'm guessing there won't be many questions. So probably
Yeah.
15
So
minutes is enough for.
because you're here and we want to tap on your expertise, we want to use few myths which are around electric mobility, and how this can be burst. So I'll probably start with charging infrastructure, because this is a pertinent question we keep hearing all the time. How do you think the charging infrastructure concern, which is raised in general for passenger car, etc., is different for truck and buses or a fleet scale deployment, and how they can be uh, handled at a national level? In a short term, how charging infrastructure concern is getting managed already by industry?
Yeah, okay. So we'll finish what Pradeep Harida has asked before we move on. So what is the role of a practicing cost accountant on this evolving business? Honestly, I'm guessing that there is nobody here who is a cost accountant in a fleet. I think the people here are uh, um, from other companies which are having transportation as one of their costs. So, as a cost accountant, what's your role? I think the first one is to understand the benefits and the advantages and disadvantages in moving from ICE to electric trucks. And we are talking only electric trucks in this meeting, and we'll be, most of it is valid for electric buses also. So if you are working for a large company and you have staff transportation, you can look at the math for it. But I think the first job is to understand the pros and cons, right? And in order to get there, you need to realize the basic math, the finance, basic math which is going on here. Point number one, it's like electric LED lamps. So let us say you have a light in your house which you are burning for 12 hours every day, right? And you are now moving. Is there some background noise? Okay. So if you're moving from a regular CFL or incandescent light to, if you're moving to LED lamp, what has happened is, instead of buying a lamp for 100 rupees, now you will buy an LED lamp for 200 rupees, right? So it is actually more expensive to buy. So your capex is higher. But what happens is, instead of consuming 20 rupees per month as energy cost, this LED lamp consumes only 7 rupees per month. So you're saving 13 rupees every month. So the extra 100 rupees that you put, you are now recovering. You're recovering very, very quickly in hardly 1 year. So this is the exact math for electric vehicles also. What you are doing is, instead of buying a diesel truck for 40 lakhs, you might buy it for about 95 lakhs, an electric truck. But instead of spending so much on fuel and let us say 30 rupees per kilometer on fuel and maintenance, you might actually spend only about 12 rupees or 15 rupees. So every kilometer you will be saving. Now, if you don't run that truck enough, then there is no sense in buying electric truck. That's the fundamental logic here, right? So we have to recognize that important point. We cannot be going and electrifying when there is no money to be saved. So you should have enough diesel being consumed, fuel being consumed, and for that we have to make sure. I mean, the ballpark figure is in the region of about 20 lakhs to 25 lakhs per annum. If your diesel bill is 20 to 25 lakhs per annum, then your electric truck is likely to be cheaper than your diesel truck in the profit and loss account, right? So if your truck is burning only about 7 lakhs or 10 lakhs per annum, don't even bother doing the math. Postpone your decision for 3 years, 4 years. It is a waste of time. You can do it as an academic exercise to learn about things, but there is no point doing it for the actual benefit in profit and loss account. So this is the role that the cost accountant has to recognize first. How is it changing my cash flows? How is it changing my balance sheet? And how is it changing my profit and loss account? All these three you have to understand when you move from one to the other, right? So that's, I hope, I think there's a huge latency between this meeting and the actual YouTube session. In YouTube right now, Sharvari is talking, I think. So this latency is going to mess things up a little bit. But anyway, we'll continue. To answer Sharvari's question on how will charging infrastructure protect itself for trucks and buses, simplest example is to actually go and see the buses. Everybody was talking about charging infrastructure. None of these cities have a problem with charging infrastructure. The reason is commercial vehicles have predictable routes and there is a money case being established. So it makes money sense to put up the charger, put up the transformer yard, bring the 2 kVA line or whatever from the substation, all that included. If it is still making money sense, then there is a straightforward case for you to put captive charging infrastructure for that particular fleet. So if you are from Ahmedabad, if you go to the Ranip depot, you will see that there are 6 chargers or something which are charging about 18 buses. You go to Narayanpura depot, you will see 18 chargers charging some 30 buses. All of them are cheaper to run compared to diesel. Why? Because they are running that many kilometers and burning so much diesel. That is why. So the charging infrastructure for commercial vehicles will not be like passenger. In passenger cars, I don't know where the person is going to go. Probably every day he might go to office and come back, but that charging, he will do it only in his house because it is cheaper. When he's doing long distance personal travel, this month from Ahmedabad, he might choose to go further north into Rajasthan for a holiday. Next, he might have to drive into Maharashtra for work. Later on, he might come further down into Kerala itself. We don't know. And so charging infrastructure has to be spread everywhere for everybody to feel comfortable to buy electric cars, right? But this is not true for trucks and buses. When that fellow is buying an electric truck, he knows that he will need only chargers here and here and here, and that will be done as solution design. If anybody is interested, you can go to that IIT Madras COSET website. Maybe somebody can type it into the chat box in YouTube. They can go to that website and see how solution design is done. It will tell you how many trucks to buy, with what battery capacity, and how many chargers to buy, and what size charger, right? So it will come straightforward, and you need to buy only those chargers for that particular fleet. You don't have to buy any further chargers. There is no need for this charging infrastructure in the case of commercial vehicles. So this is one. Okay, there have been a few questions which are now coming in. So I will start reading. Prakash Sharma wants to know, how does the EV cost and life compare versus ICE vehicles? Cost, I just explained. So, but upfront cost, EVs will be more expensive. So if you're not running enough distance and burning enough fuel in ICE vehicle, don't buy electric vehicle. I should not be saying such things, but I am saying it because this is about money. This is not about emotions. So you should be burning at least 20 lakhs to 25 lakhs of diesel per truck per annum if you want a business case. Electric vehicles have better life. There is no question about it. It is a much simpler system. And so instead of a combustion engine truck becoming not useless, but getting degraded to lower duty cycle after 7 years, In electric, you can expect it after 10 years. At least 10 years, you will get much better performance. So there is no comparison on life. Electric trucks are much better. Next is Nitin Chikale. We started with petrol, diesel, then shifted to CNG and now to electric. What can we expect as the next? We didn't shift. One part shifted to CNG. There is still 90% of vehicles being sold is still diesel only in trucks. So CNG is one of the fuels. LNG is coming for trucks, and these are better for emission and for costs, total cost. That is why they are seeing uptake. Electric has started, and over a period of time, electric will rule supreme by 2040 or 2045. In truck market, electric will rule supreme. There might be a hydrogen fuel cell, that might not be. But today, the topic is not to predict the future, but to be equipped for today. There are electric trucks. It's going to make money sense. As cost accountants, are you going to sit down and do the math and make your company benefit from that? That's all we are discussing today. And how do I finance it based on improved cash flows and improved profitability? So I say that there are going to be many years before combustion engines go away, and CNG and LNG will not take a big market share because over a period of time, electric will be cheaper than CNG and LNG. So people will go directly from diesel to electric. That's our estimate right now. In the next 3 to 4 months, there will be a powertrain roadmap which is released by IIT Madras for electric trucks. That will give you more clarity. So Biki Rahman, I believe the limited number of questions because of new topic, next session attendees will become more familiar. Fully agree. So we can look at it later, or we can have just a Q&A session, and there is no material being presented. Not a problem. Lovely to see that point. And then Nitin Bharadwaj, are EV vehicle in current scenarios, looking at their cost of acquisition beneficial in comparison to diesel buses? Also cost and life of batteries. This is what I just explained. So honestly, not all trucks make money sense. Not all buses make money sense to electrify. You as cost accountants are now holding the responsibility to sit down and do the mathematics that is particular to your company and your case. So you have to, there is no overall rule that I can give you as an answer to your question, which is at a generic level. You please take it as your company, your challenge, and what it is that you are going to do as cost accountant in your company in the context of transportation, right? Remember, the last 3 months has seen close to about $1.3 billion being invested in electrification of buses. These investors are all cutthroat private equity people. They're not going to be investing in this because they have a larger purpose in life, etc. Their purpose is to make money. So if they are investing in electric bus fleets, it's because there is money to be made. Otherwise, nobody is going to get there. So, and you cannot make money if your costs are higher. So upfront cost is high. I told you about that LED example. You have asked this question because at the time of my talking, your question has appeared for me, but you haven't yet heard me. So essentially, this is about investing more on CapEx, but saving very, very highly on RevEx, and therefore looking at the business advantage. Next, Arun has replied to that. Rakesh, electric vehicle is inelectable with the national plans and policy on capacity of. I don't understand this, so I will skip the question from Chaudhry Rakesh. I don't understand the question. So B. Kumar, one suggestion: cost audit to be made mandatory for all vehicles, including EV vehicles. Yeah, I mean, I am unfortunately not yet the Prime Minister of India, so I can't make the law. So I will leave it to the overall government officials. We do work with them, but we work on larger topics. We work on mandates, we work on incentives. We do not go to this level of prescriptive actions. I think these are the questions which have come up in the YouTube channel so far. I'm quite sure there will be much more. So given this, back to Arun, we are not hearing you very well here. It's breaking up.
That window, sir, of our video, I've typed it out there. Basically, the wear and tear of EV trucks.
Okay. Operated mostly in industrial area, which usually have high wear and tear. See, electric trucks are used only in industrial area seems to be a wrong assumption, Kapil. I think I would not state that as a fact. Electric trucks, diesel trucks are running in different applications. In that application, for me to move from diesel to electric, does it make money sense? So if there is one thing is clear, if it is a dusty environment, typically diesel engine life will be affected more than electric motor life. This is a completely sealed system. While in diesel, you've got air intake, and then you've got the engine processing all that air, even though there are air filters. But your air filter is frequently thing. In an electric vehicle, there is no air filter at all. And the extra duty cycle in terms of load and road surface undulations, the weight of a diesel engine is something which is detrimental to itself. The motor is a lighter item compared to diesel engine. So the motor by itself will not be affected much on account of the heavy load and thing. And so the same with the battery. The batteries are going to be much, much heavier than the engine, but they will all be stationary batteries. It's not got moving parts. So, and they're all fully sealed. These are all fully sealed. So even if you pour water on it, no water will go into it. So my guess is if the challenge is dust, diesel will see more trouble than electric. But if you're talking about load and road condition, I would say both will be the same. Both diesel and electric, there will be same number of challenges. But this is taken care of by the OEMs. It is not our job. If a diesel vehicle in that environment is lasting 4 years, electric vehicle will also last for 4 years. If an engine is lasting for 7 years, motor will last for 9 years. That is all. There is really no other difference between these two. I hope that finishes all questions, I guess.
Can I ask one more additional question? Because again, that's a typical question which is asked all the time. Residue value uncertainty is one of the major concerns typically raised by financiers when it comes to electric mobility, but very specifically commercial assets like bus and trucks. What evidences exist today to help financiers to assess resale value or second life potential? In absence of exact answer, how do financier can proceed, and what we expect on a policy front to solve this concern?
See, the loan provider, the NBFC, he's basically lending based on 3 criteria as of today. One is the security that he has on the vehicle. That's part of the paperwork. So he has no other assets. The truck is the asset against which he's lending. So that's one important part. The second, most of the loans are given to borrowers where they know that the borrower is already on a sound wicket. So there are significant decisions being taken by the NBFCs based on the borrower itself, not just the truck. So that remains the same. Whether a borrower is taking electric truck or diesel truck or CNG truck, the NBFC is taking on a bet on the borrower. That part is not going to change. The third one is individual business case of that particular fleet which is being funded, right? So does he have enough income in that new fleet which he is taking? And in that, does he have enough profits? So this is something which is also not going to change, because the TCO parity, if it is not there, the fleet operator is not going to take an electric vehicle. So we come down to resale price, and you have raised a very important question. This is a genuine concern. The NBFC, as of today, has zero evidence that an electric truck can be sold for such and such a price, which means two things. One is we have to find a way to address his concern. That is one part. The other is a business solution. Classic example is some of the tipper applications. If you see, the NBFC is lending for the truck not based on the residual value at all. There is no residual value taken for the tipper when he does the work. So at any point in time, he believes that the recovery of the investment is driven by the overall project, and it becomes a project cost. So the success of the project is what is important. And but however, once again, if the project goes bad and the truck is left after 2 years of use, the NBFC has no place to go and sell it. So at a policy level, we need to come up with a resale residual value or a resale price risk cover. There is actually no other risk cover which is required. Technology risk is fully covered by the OEMs now. They offer 7-year, even 10-year AMC at 4 rupees 70 paisa, 5 rupees per kilometer, including battery replacement. So all the question about battery, is this technology going to work, blah, 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 is now absorbed by the OEM. And they have removed the technology risk from the table. That's been addressed by the OEM as an AMC. They are happy to take it because this is also some little bit of profits for them. On AMC contract, they make a profit. So it is good for them. So they are exploiting it and they are capitalizing it. All the electric truck guys are offering this AMC for a long time on just the electrical items: motor, controller, DC-DC converter, power distribution board, battery, everything is covered under that, and it is covered completely. So if you run 1 kilometer, he will charge you 4 rupees 70 paisa. Simple. And if the battery fails or motor fails or it has to be repaired, etc., he will do it at his cost. But the resale price, if the loan goes bad and after 3 years the truck comes back to the lender, there is nothing. We have to come up with a policy which will cover it. Fortunately, government is working on it. You must have seen it in the newspaper articles. What they are trying to do is use NABARD, Rural Electrification, REC, and I think SIDB. They are going to use these guys to offer refinance to the NBFCs, where that risk is borne by these large financial institutions. And they need to do this only for the first 50,000, 100,000 trucks. So the exposure is actually limited to about 6,000, 8,000 crores over 10 years. So the government is able to absorb it in these financial institutions, which are massive ones, right? So the government is saying, I lend from me to you, and you lend to the owner, buyer of the vehicle. But if he's not able to pay your loan and he parks the vehicle back, currently this is it's less than, I think, 2%. I think Arun can correct me. But the number of defaults are negligible. It's a very good market, the truck market. So the government is saying, I'll give you money, NBFC, you lend, and if he gives the truck back, it is my risk. It's not yours. I'm giving you so much for sure, right? So this kind of policy will work. The other one is what financial product, that is the resale price risk cover, which is floated as a fund. And that fund will cover the risk of the NBFC. This is what SIDB had done in partnership with, I think, Shell Foundation. But it was a small effort. It was some $3 million or something, peanuts. Compared to India's size, that was all nothing useful. But I think this is a big problem, and this problem has to be solved for the lender. Otherwise, it's not going to take off. And the government has understood it and they're starting that work. So that is good to see. Next question, what could be envisaged as estimated useful life of EVs? Will this aspect be factored into the EV loan model? I don't think so. I think Arun has explained this in his thing. Useful life is deemed to be 1 year less than the warranty life today. That's what they are doing. And they are finding enough takers. We need to cover the resale price risk. That's all. Yeah. That is once again brings us up to date with questions. One last thing is before I go, I'd like to explain it because I think the YouTube channel is at least about 15 minutes behind us or 10 minutes behind us. So one thing I would like to highlight is the time taken. You'll be reading a lot about if it is diesel truck, I can go in 8 hours. But if it is an electric truck, I have to stop in between to charge for 45 minutes. So it becomes 8 hours, 45 minutes. Trucking mein aisa nahi hoga. There is a lot of talk. This is true for trucking in Europe and USA and China. This is not true in India. The reason is we have our own peculiar situation, which is nothing to be proud of. It so happens that it is a nice situation for us for electrification. But our road discipline is notorious. None of us are capable of driving properly, and the police also don't enforce anything. So what is happening is the diesel fellow, he's constantly stopping in the highway. While in those countries, he's cruising. He's going at peak speed, peak permissible legal speed. He's going constantly. Our place, they neither stop you for overspeeding, nor do they stop you for any lane change and indiscipline in the roads. So in India, the truck driver with diesel truck, if he travels for 100 hours, 70 hours or maybe not less than 60 hours, he is only accelerating. He is not running at peak speed. Now, electric trucks have fantastic pickup compared to diesel trucks. Fantastic pickup. So you must have noticed it in the two-wheelers and all the cars, etc. Fantastic pickup. And that's one of the reasons why Tesla also became a thing, because electric motors offer phenomenal torque at low RPM itself. Diesel engine cannot. So what is now happening is, instead of spending 70 hours, 60 hours accelerating, these fellows are spending only 30 hours accelerating. Rest of the time, they are going at regular speed, right? So as of today, the data from the market is telling us that the average speed is 20% more for electric trucks. This is the data. And this is true. This is true. It makes sense. And it fits in with what we are seeing. One more reason for this is, typically in India, most of us, most of the truck owners buy very low powered diesel vehicles. They don't buy high horsepower. So their vehicles by nature tend to be sluggish compared to what this bought. So just for you, a 50-ton tractor trailer in Europe will not come with anything less than 450, 500 horsepower. And I'm talking today. In India, the fellow thinks multiple times before buying even 320 horsepower. He doesn't want to go anywhere above that. So he's already underpowering his diesel. So his pickup is low. But he thinks he's saving on fuel. So he's always going for lower power engines. And therefore, his travel time is higher. In electric, you save so much time during travel that there is enough time left for charging, as long as your journey is an 8-hour journey. So we have evidence of this for clinker transport for cement sector with 55-ton tractor trailers in Rajasthan, UP, Gujarat area. We also have this evidence for Amazon trucks and pharma trucks, which are running between Bangalore and Chennai, where they are able to go and reach faster than the diesel truck, even though they are stopping for a half an hour, 45-minute charging break. So there are quite a few cases where we are getting good turnaround time and speed with electric trucks. So this is an important point which was not asked as a question, but I thought it will help you to know that there are enough number of applications where in trucking, electric trucks will be more beneficial on turnaround time. So this is thing very useful for tippers, mining tippers, etc. It will be very useful. One last question, I'll give it quickly. Is electric vehicles safe enough inside the plant area? Yes, sir. I think question came from Rakesh Vasishta. It is safe enough for me to blindly send my grandchild in a school bus which is electric. So you please don't listen to all this WhatsApp University flame videos. The electric truck, statistically and in engineering, is currently having lesser number of fires than your combustion engine vehicles. So you do not need to bother. Please listen to one of the podcasts where I have interviewed Professor Sundaresan from IIT Madras, and there is a very pointed question about safety there. And I think that podcast is there in the COSET website and in YouTube. He talks about why these are safer vehicles and on what basis, right? So you can stop bothering about all WhatsApp forward with showing two-wheeler burning in a truck, two-wheeler burning in a shop, two-wheeler burning in thing. Right now, two-wheeler burning is news. Just like Iran is news and nobody is even reporting about Ukraine. Everybody is talking only about Iran globally. Ukraine, till Iran started, Ukraine was news, right? Similarly, till something else comes, these guys, they'll continue to focus on electric vehicle. And all of us like reading scandalous reports. We don't like reading positive reports. We only like reading negative reports. So WhatsApp is going very happy with it. So I think we've come to my cutoff time. So I will excuse myself with your kind permission. Good luck with the rest of the session. Just to reinforce, as cost accountants and even the chartered accountants, as well as people in the finance organization, you have a strong role to play. You need to understand how the cash flow, P&L, and balance sheet changes when electrification happens. Now, if you're running a fleet, it is a completely different approach, but the basics are the same. And if you're working in a company which is only using transportation as a service to move your materials, there the implications are almost entirely limited to P&L because nobody carries asset in their books. So you can keep it away from your balance sheet and just look at how your P&L will work and how your supplier's cash flow is going to be. But it is important that you spend time and understand the basics here. Rather than talk as a generic public-private person. You should be talking as finance professionals and costing professionals who are contributing to the management profession. And you have a vital role to play. Very happy to help you to any extent that you want from COSET IIT Madras. This is our primary purpose. A lot of us are getting our salaries for this purpose. So we'll be happy to help you understand details better. We're a very small team. We are only about 11, 12 people. So we'll have limitations on the number of amount of support that we can give, but what little we can give, definitely we will provide. Thank you very much and have a good session.
Great. Sir, thank you so much for that insight and busting few myths and explaining the fundamentals. We will continue now with the session. Thank you so much, Karthik sir, for your time. And the remaining question and answer, I know COSET team will be here, so we will try and pose to them. Thank you so much.
Thank you. Bye-bye.
Now I wish to take opportunity to introduce Chintan from WRI India. Chintan has been a key team member, team lead for electric bus team of WRI. He works very closely with Ministry of Housing Affairs, Mahua, who is now currently the custodian of PM e-bus Seva. He has been in bus ecosystem for more than 15 years now, and he has actually seen transition from ICE heavy state transport units to now state transport units which are going towards complete electric bus fleet. So, with his immense experience about this e-bus overall bus transition journey, I'm sure he will be able to share some interesting. And one thing we need to look out for in this particular segment, this has been proven even when the technology transition within ICE happened. Electric, like the bus was the first vehicle segment where it was tried. After success, whether it was innovation in motor, changes in the chassis, uh, those things happened in bus. They were tried in bus and then got adopted as it is for trucks. So whatever success we have seen in electric bus, we feel that very parallel tracks can be done for as a learning for trucks later. With that note, I want to welcome Chintan and handing over to Chintan. Chintan, thank you so much for joining. Over to you for bus.
Yes, thanks, Sharvari and team. Hope I am audible more clearly. So just will walk you all through the electric bus journey in India and what is the potential ahead. So the importance itself comes from that 1 in 4 person in India is using bus daily. That is almost 23 lakhs buses which have been registered till today. That almost varies 40 crore people per day. So that is a kind of mobilization it does. Next slide, please. So when we talk about this 23 lakh buses, only 1.5 lakh or 7% buses are in the public domain. That is government STU run buses. Otherwise, 93% buses are private owned and operated. Of this 7% also which government is operating today, the trend is that they, with especially with the electrification, they are moving towards the PPP based operations. So there also there is a contribution where the operator, the private operator or OEM has to have that asset in their books. So there also the share increases, and the major barriers which are coming, especially because when we say the electrification is subsidies which have came till date in last 7 8 years is mostly in the public sector domain. So private sector is still inching slowly with their own efforts, and the major barriers you see is the high upfront cost, the low range of electric buses because most of them run intercity. There are poor charging infrastructure or unavailable financing option for the kind of support they need. So just for a basic number that 90% of bus operators own only 1 to 5 fleet. They are very small operators and they can't afford to have a very high investment in each bus. So the kind of a financing option they need will be a very uh, they have to have that lucrative and easy funding options. Next slide, please. So there have been some players which are coming into the market. You must have heard a few of those listed here. Nugo is operating more than 300 buses, ranging from, especially in intercity. Even some of their fleets are operating up to 400 500 kilometers also. They are, whether it is Nugo or Fresh Bus or Leafy Bus, everyone is trying to get certain funds, global funds into the procurement or leasing of these buses. EV Trans is a major player here, and recently Flix with Vertilo has also uh, acquire funding for the 500 buses. Next slide, please. So, what has happened over the years is when India transitioned to the e-bus, it was a very cautious transition. As Sharvari also said that we can learn more from this journey. So what India did, they first made a plan. This was National Electric Mission and a plan which was made in between 2011 and 13. And then they realized how the EV market has to move. From 2014, when they started doing a pilots of 1 or 2 buses in certain regions, they started understanding how it will move. And in 2017, so 2015, the FAME scheme came, but it was without buses. 2017, FAME was extended to buses also. Around 10 cities were selected. They tried with and some subsidy, which was up to 1 crore rupees. What they did was with these cities, few of the cities were allowed to do with the PPP, few of the cities were allowed to do with, they were allowed flexible with own and operated model. But with the learnings, they realized that yes, e-buses can operate well in urban areas. The range anxiety is not there. The challenge is the model, because when the city is owning and operating the kind of new technology which is there, they are not aware about it, and they need to have OEM into the game. So the when the FAME 2 came, they scaled up to 5,500 buses. But here they mandated that OEM will be there as a key player. They will lead the consortium, and they will ensure that technology is risks are mitigated throughout the 12 years life cycle of a contract. While the FAME 2 came, COVID also came, so the bus intake started going down. So Government of India decided to grow with the Grand Challenge model, where they said that they will do a demand aggregation, kind of from a retail to a wholesale kind of bidding, focused on major 5 cities who can deliver that kind of an operations and financing support. And with that success of a Grand Challenge, they having those 5,000 buses tendered successfully, they realized that the rates were coming even 25 to 30% cheaper. And hence, they went ahead with announcing a big program, which was NEBP, National Electric Bus Program, aiming for 50,000 buses in next 5 years. And in first tender, they again went ahead with 6,500 buses. While these two major tenders were national tenders looking at demand aggregation for bigger cities, parallelly, Mahua looked at that smaller cities also need a different kind of a support. There were different challenges coming, like the smaller city did not have capacities, where to park the bus, the infrastructure, from where to charge the bus, that is a power infrastructure, and the operation cost. So PME Bus Seva said we will support 160 plus cities for 10,000 buses, but with an OPEX based subsidy. So moving from CAPEX based to OPEX based. So when they are operating, they are assured to get the funding for operations. Further, for the bigger cities, MHI was also planning for PM E-Drive, where 14,000 buses for those cities were there. Already all these buses have been tendered in 7 cities. So if you will also see the subsidy which have been rolled from down from 55 lakhs to 35 lakhs from FAME 2 to PM E-Drive, because the over the time, two things have happened. The cost of capex has been stabilized, and the technology risk have also been stabilized. Also, the last thing, the PSN part of it, while government identified that PPP is their way to go, but there is a need to assure that there is a continuous payments which are happening to operator from cities. Hence, there has to be payment security for those private players also to make their business viable. So PSM scheme was announced. So these were the learnings from the FAME, that they, instead of a small lots, can we go for a bigger lot sizes? Can we have those standardized products? Can we have those standardized contracts? Can we have those standardized monitoring and evaluation methods, and to have more credibility with the STUs? So these challenges which were found were taken and improved in the coming schemes in PM E-Bus Seva and PM E-Drive scheme to make those PPP models more viable. So this all happened, and based on this, next slide, please. And based on this, they found that the demand aggregation in the gross cross contract model is having the 30 to 35% lower costs. But when we see it as a total cost of operation over 12 years. So when we see this cost as per kilometer, these are these came out to be much cheaper based on certain conditions and the contract conditions which were standardized across the cities. Next slide, please. And what we found that if you see the timeline, the FAME 1 and FAME 2, which happened up to the deliveries happened from up to 21 and 22, the rates were coming very high, and hence the smaller cities were not taking that risk of operations. But with the demand aggregation, and when uh, mass procurement was made, the cost have came drastically down, and that became a trend thereafter that what Government of India's schemes came from Grand Challenge, NEBP, PME Bus Seva, PME Drive, and they are also looking that in future also the demand aggregation is a way to go, and this have been in practice. So also when we see in the case of Bangalore, also Bangalore has procured buses for various tenders from various lots. Different OEMs are supporting over the years. So different tenders, if you see, there is a mix which is coming. They are having more kilometers, because more the kilometers, the better the rates what they can have. Also, for each operator or a consortium, what kind of financial mix also for debt and equity that is mentioned below, that various banks are supporting, and uh, most of the tenders, recent tenders, have also ensured that up to 70-75% uh, uh, of debt should be there, while equity should be 30. So the operator and OEM have that skin in the game, and they will not run away during the PPP contract. So there has some risk balances which have been made. Next slide, please. So recently the PM e-drive is there, and payment security mechanism, which Government of India have taken up. Payment security mechanism, to highlight what it is. So we had talked to various stakeholders, operators, OEMs during 23-24. WRI did lot of consultations there. What they understood was that when the PPP came, while the contract sometimes said that there has some payment timelines, but due to the file movements or certain reasons, the payment schedules were getting delayed. While the operators and OEMs required timely payment of EMIs. So it was also risking the cash flows of operator OEMs, and thereafter the payment towards EMIs, that is, the banks were also getting affected, the financiers were getting affected. Hence, the PSM, when it came, it structured that, okay, let cities do a tender. Government of India will create a payment security fund uh, under MHI. The CSL, which is their subsidiary of MOP, who are doing the tender, will be the fund manager. Let cities and state pays operator time to time. If the payments are delayed due to XYZ reasons, this fund is there to support timely payments to the operators OEMs, so that the buses are running, people are also the commuters are getting the services. Also, the banks are not at risk of delayed EMI payments or so. And at the back end, the states will recoup the fund, or will, if they are also delayed, they will just manage it with their state release of their quarterly fund. So that is how they ensure that this fund will have reduced the financial risk of operator OEMs and banks. Okay, so government is doing a lot of efforts there, but it was more into the government sector buses, the public buses. What we also look into is private sector buses, how they can be financed. And here what we did was, let's explore how we can finance these buses. So we created a tool that let there be revenues, let there be expenses, and there may be policy levers as an input. This tool will process and will provide what will be the payback period, what will be the total cost of ownerships or IRR, so that the investors can make uh, decisions which are more rational, and they are also not at risk at that time. And these inputs are very flexible. You whether you want a single bus, when you want a lot of bus, when you want to go ahead with a project based assessment, or there may be a certain entity who wants to stagger their uh, procurements and go ahead with the the cycled approach of longer term, so they can also use this tool. So a couple of examples which we tried was with the public urban bus, intercity bus, and institutional buses. So urban buses, we just compared the equivalent 9-meter bus for ICE and electric. What we ensured was at least they have to run 180 kilometers per day. That has to be there. We had to ensure that what will be the energy cost, the battery life, and all those things will be there as per the tender conditions, or for the delivery of those 180 kilometers per day. So which are the recent tenders demand. What rates which have been discovered in the recent tender of PME bus seva is almost 62 rupees per kilometer. If the city is taking the diesel bus at the same rate, what will happen? We just tried to map, and it was identified that if at the same rate the city wants to have a diesel bus, the diesel bus will not make a enough IRR, and their business may not be viable. So the payback break-even period will come somewhere around ninth year, and the IRR for the electric bus will be much better, and they will make almost a 4 rupees a kilometer when we will talk about the lifespan of a bus. Similarly, for the intercity, while the bus batteries are not for much longer distance, but for almost 300-350 kilometers, they are available. For the similar, we made this calculation with the tool. Here, the operating revenues have been identified almost like 50 rupees in the last tender, which was done in NEBP, and the rates were around 50. For the same rate of the diesel, if a city or the ST wants to provide, the operator wants to provide, still the electric buses are doing better, and they are having a much better payback period. So electric bus, whether it is an urban or intercity, makes a sense. But in case of an institutional, still there is a challenge, because in institutional buses the kilometer is only 60, and the in case of an electric bus, because the capex, the fixed cost is high and the operation costs are lower, so running more and more kilometers makes a more sense. In case of one school bus or employee bus, that is an institutional bus, the kilometers are less. Hence, in case of institutional buses, they require almost 25 lakhs of a subsidy to make that business more viable. And recently, few EV policies are coming. Example, Delhi, who are looking for transition for school buses also, and they are ready to provide subsidy for these buses also to make the school buses viable. So different policy actions can be taken, and when we see this policy action, there can be two ways. What we explored with, can we have a bus life increased by 2 years more, the holding period, because longer you hold, longer you run, more you run, the cheaper your EVs will be. And
I'm sorry to interrupt. I think we can wrap it up in one
Yes,
more minute, and then
this is the last slide. So and the second policy action could be interest subvention, where the government can provide 2% of an interest subvention. So with these two policy actions, especially in case of an institutional buses, other than giving those subsidies, if we the both graph shows that if we have one action in place or both the action in place, how we can make the electric buses more viable. So we are in consultation with various EV state EV policies also, to get these actions into place and make policies into place and make those e-buses viable. So just last statement, e-buses will happen. All schemes which are coming in past 10 years, or government is promoting e-buses, that is a way to go, and there's a lot of scope, lot of bandwidth for bus operators also, policies also, to make this ecosystem viable.
Thanks a lot for that. I think deep dive into the electric bus ecosystem. If you're looking at the commercial vehicle ecosystem, I think electric buses have been the most advanced in their journey. And the following are the private buses and the commercial vehicle segment, which is the freight segment that we're going to now deep dive into. I will be covering in the next 10 minutes, we'll be giving a brief snapshot about what's happening in freight and why do we see the need for financing into the freight ecosystem, and then hand it over to the COSET team for the question and answers. So any question and answers that you all have, please put it in the comments, and this is the last 20 minutes that we would want to wrap up the session in. While we have talked about how electric buses have been very important, or bus segment has been very important because of the sheer amount of public that it transports on a day-to-day basis, the freight segment, the logistics being the backbone of Indian economy, we are looking at freight segment, which is almost 71% of the whole logistics transportation, which is dependent on road freight. The rest are actually transported by waterways, airways, and all other medium. But if you're looking into the road freight sector, this is only 5% of the total vehicle population, contributing to almost 45% of the emissions. And that's the reason why we're looking at decarbonizing this sector. And out of the whole diesel consumption that is done by the country, the share of diesel consumption by trucks is 64%, which is more than more than 2/3 of the diesel which is consumed by trucks. And that's the whole point around why we are looking at the electric truck transition, or in futures, other zero emission technologies as well that we've covered in the earlier slides. Now, when we look at the policy ecosystem, the PM E-Drive, which was notified in 2024, that was the first policy that spoke about electric trucks and included electric trucks into the subsidies front, with allocating around 500 crores for e-truck adoption. Almost 5,643 electric trucks are supposed to be supported through this, and these cover both N2 and N3 categories. By this, we're talking about the medium and the large fleet, large trucks ranging from 3.5 tons to almost 55 tons and above. And following this, there are few other states also that have adopted the subsidy approach, Maharashtra being the only one so far, where it is giving subsidies for N1 and N2, N3 category. Almost 10% of incentive is being given based on the ex-factory price. And the number of vehicles that are supposed to be incentivized under this are around 1,000 to start with. Apart from this, Office of Principal Scientific Advisor had launched a report in 2024 called Bharat ZET Policy Advisory. This advisory is a report of almost 30 policy interventions that have been identified, which are very, very crucial for accelerating adoption of zero emission trucks. These include toll waivers, which are going to support the OPEX front or operational front for the electric trucks running. These also include charging infrastructure enablement, technology clarity through powertrain roadmap, and all other facets of accelerating this adoption. And of these, already the ones that you see in green have been adopted or are already in motion by the government, already in implementation by the government of India. The blue ones are the priority policy interventions that have been identified and they need to be looked at. If we are talking about policy, we know that there are certain policy levers that are coming in. But for us to start looking at financing, we need to look at some kind of operational evidence. We have multiple electric trucks that are already in the market, which are running, which have ranges from 80 kilometers to 300 kilometers. The battery for 3.5 tonners is ranging from 5.96 kilowatt hour to almost 453 kilowatt hour for 55 tonners. And these are across various categories or segments for deployment, which include cement, metals and steels, ports, garbage collection, etc. And for this, there are multiple manufacturing units across India that we've also seen earlier, but these manufacturing clusters are mainly to be seen in Tamil Nadu, Maharashtra, and around the Manesar or the Delhi NCR belt. And these models, initially, I think we had started with around one model actually in 2020, which was by IPLT. And post that, we have now come to more than 30 models by 16 plus OEMs that are there in the market. And this deck we'll be sharing with you all so that you'll be able to see what kind of models are available and what are the ranges, what are the battery sizes that we are seeing in these categories. Now, models are there. That is the supply side of it. We are seeing manufacturers deploy these models, and there are uptakers as well. These are the fleet owners or the shippers who are basically the manufacturing companies who need these transportation of goods from one place to another. These can be the cement companies, the ports where these trucks can be deployed, the retail or e-commerce segments, and few other sectors that you can see. Almost 50 plus pilots have been deployed across India so far. 30 plus have been deployed, and 50 plus EMHTT pilots have been deployed. And more are being planned from day-to-day basis. And if you see the map of India and where are these pilots actually running, you see major concentration in the western belt and the southern in few areas and the northern Delhi-Jaipur corridor. So, for example, you have Switch Labs, which is running the solar-powered IPLT trucks from Sirohi to Balaram route. You have Mahindra Logistics come in, and various other companies, cement companies, and majorly these are seen in cement companies, and these are seen across various segments, and these are actually identifying those priority freight corridors and identifying where these charging infrastructure will be deployed in the beginning. And this is where the concentrations are supposed to be seen. Based on this assessment, this is the initial part that we've seen is from the industry front, but also from the government front and from the Office of Principal Scientific Advisor. There have been certain ZET corridors that have been identified as priority corridors for the movement of road freight in India. And these priority corridors have been shortlisted as majorly 10 that we see in the central map. And these are also mapped with the MHI, Ministry of Heavy Industry corridors, which had identified around 20 corridors in India. Now, the idea behind corridors is that the presence of manufacturing plants, the presence of multimodal logistics parks, the ports, all of these actually define where the freight is being moved. This also is overlaid with where the city centers are there, where the warehouses are there, in all these areas. Now, if we're able to deploy charging infrastructures along these routes, it will be more beneficial for the trucks to run, and the range anxiety which is there in fleet owners, that will reduce. There'll be a proper ecosystem and a tripartite agreement that can be created between the shippers, logistics service providers, and charge point operators, who can together come in and make sure that the operations are not being affected. And this can be captive charging that we've seen majorly in all places so far. In case charge point operators are coming up with these along the key freight corridors, you are also looking at public charging stations. Majorly, these have been established in the passenger segment. Commercial vehicle charging is yet to grow so far. Battery swapping in freight also has started. So there are 55-tonner battery swapping stations already coming into the market and making sure that the charging time is reduced as well. So this is around the charging infrastructure. If you're looking at the financing mechanisms, there are around 5 major financing mechanisms where we need all of you people to start looking at how do we accelerate finance and unlock finance for this segment. It can be done through asset financing. It can be done through blended financing, where I think there's an example like Green Growth Equity Fund that was created earlier, which is a form of blended finance where multiple people can come in and also create some kind of hybrid financing mechanisms of looking at equity and debt models together. Guarantees and mandates have already started pouring in from the government side. There are aggregation models like the GCC model that we've seen in the electric bus example, and the leasing models, which was majorly seen in the E3-wheeler segment, and but also can be adopted in the electric truck segment, because there are multiple leasing companies that are coming in place. With that, I think I'll just close my bit of it and hand it over to COSIT expert Selvarajan sir. Please, you can come in. If there are any questions in the chat, I think we can start addressing them. I think there's one question from the chat.
So basically,
So
cost benefit
Go
or
ahead.
working model for EV. So, sir, maybe you can just look at the broad cost heads for EV versus diesel and tell us how they vary, whether they are higher, lower, etc.
Yes, good evening. Like Karthik sir has mentioned, the initial cost is 2.5 to 3 times costlier. And the operating economics is almost 50%. So, like diesel, if the cost is around 30 rupees per kilometer, here it's going to be around 15 rupees. So the maintenance cost is what we worked out is it's about 10% lower than the diesel vehicles, because the diesel has got moving parts, diesel engine, and which deteriorates due to the environmental conditions, air pollution, etc. So the engine life gets deteriorated and requires reconditioning. Whereas in electric truck, it keeps going. So only the battery replacement comes, and that battery replacement is also now covered under AMC. So the cost of all other aggregates like your tire life, tire cost, all that is going to be same. Driver cost is going to be same. You can have a look at our website, and we have a TCO tool which gives you the comparison between electric and diesel trucks. Anything else?
No, I think, sir, maybe you can also touch upon who are the manufacturers right now, because for the audience, they might not be aware of what are the makers and models out there, right? They might be thinking that it is something exotic, which is being imported or something. So for trucks as well as for buses, if you can give us examples of models, manufacturers, and use cases.
Maybe 3 years back or 4 years back, there were very few models, few manufacturers were supplying bus and truck. Now, uh, every reputed manufacturer in India, they have models. They have the lead models. So now all of us, what we have seen in this industry is the 55 tonner makes sense to go for electrification immediately, which runs for longer distances and consumes close to 25 lakh of diesel in a year. So that if you see the Ashok Leyland, if you see IPLT, which is the TA Group's company now, ECA Mobility. So all these people have gone for 55 tonner. It's readily available. I think within 2 months, 3 months of supply line, they are able to supply. What we had seen in this bus segment, uh, there were very few earlier. Now all the manufacturers have the buses, and they have participated in this tender, and the numbers have gone up. So there are big volumes for every manufacturer to invest and bring out a product. Another thing what we have seen is the products or the whatever the truck or bus was manufactured by the reputed manufacturer in India, they are all performing very good. So they have validated it because their brand value is at stake. If you are going for some new company, then it may be there may be a risk. But all these reputed manufacturers who are there for more than 50 years, 60 years, Tata Motors, Ashok Leyland, Bharat Benz is coming in, Acer is coming in. All the people are ready with the products, and their products are well tested by them because it affects their brand value, and because they are going to supply to the same customers or operators who are using already diesel trucks. So the product wise, it is available. As a lead model, it's all gone for a 55 tonner, and certain products are available for mining applications, mining material or ore transportations. So slowly it is catching up, and there are vehicles in the LCV segment, which is running for this parcel applications. The criteria is it has to run more kilometers. If it runs more kilometer without any subsidy, without any other support, this uh, vehicle itself can be a profit-making vehicle. There is one question about is electric vehicles are safe enough inside the plant area? So electric vehicles are safe. As I said, now the vehicles manufactured by the reputed OEMs, they are all well tested, well insulated, well protected against dust and water entry. So if the battery should not get heated up, there are very good cooling systems. They have validated the cooling systems, and if you see the bus sector, I think first batch of buses were supplied to Ahmedabad, AJL, in 2016 or 18 or 19. So the buses are being running there for so many years. The trucks, limited trials, and inside the mining, this pre-COVID itself, like Propel Industries or IPLTs, they have all supplied these vehicles which are undergoing trials, testings. With so many years of testing and trials, now I think it is matured product for bulk supplies. And once the bus, if you see the bus prices have come down when it has become a big numbers. So the import content, import cost, and the localization. So when there is a business, every manufacturer, they go for a localization so that they can reduce the cost and compete to the competition. So that's what it has driven in the bus segment. So, and truck segment, if you have time, you can see everywhere now the number of trucks have increased drastically. In these 55 tonner, you have Chinese products also there, and you have Indian products also there. And battery technology is matured and stabilized. So what can go wrong in the battery and how to protect it, all this as it's already tested and validated. Another question I saw is inside the plant they are not allowed for a charging. So this charging takes a lot of current consumption. So it depends on that cost. So if somebody is having a thing, suddenly there is if it is not planned properly, the current consumption will get affected. So that may be one reason they are not allowed. Otherwise, for captive this thing, they have to plan and have a charger at that locations, captive charging. Electric buses are facing significant operational prime market. Heat and Bangalore. So battery degradation or inadequate charging infrastructure. So initially, maybe they have not estimated what will be the battery consumption. So, and Bangalore like city, you can't predict the traffic jams, and if it is held in the traffic jam drastically, the power comes down. Like our mobile, If the battery or the tower is weak, then your battery overworks and the battery drains out faster. So that could be one of the reason the battery would have run down faster than what they expected. Because when we say a certain range, it is for the standard operating procedure. So, but in actual use, because of traffic jams, bus may get drained out. So battery may get drained out, and I think over a period they would have analyzed and they would have understood what should be the minimum level to start the trip. So instead of going for a charging at the end of the day, so they may have to go for a in between charging, a top up charging. So if they miss that, then they may end up in en route breakdown because of battery rundown. And earlier,
Almost out of time, sir. And it's been a marathon 2-hour session, which has been quite informative. One thing which I wanted to re-emphasize is that, and the electric bus question is very, sorry, Chintan, can you, yeah. So the electric buses have been around for a decade, right? You are hearing about all this story of breakdown and all that only now, okay? For a decade, Tata Switch Mobility, which is Ashok Leyland, etc., have been running buses in Bombay, and it's gone quite well. So it's a question of how the bidding is done. Okay, I would rather say more than technical, it is about the bids. Bidders will bid aggressively. This is a rule of thumb in India. If there are more number of bidders like electric trucks, I mean buses, a lot of bidders have come on board compared to 10 years back. So more aggressively they will bid. More aggressively their assumptions would be, right? And when that happens, some of these side effects happen, right? It is less technical, it is more contractual, I would say. Chintan, you wanted to come in, and then Selva.
There could be reasons because of maybe shortcuts or in urgency they would have come out with a certain quality of connectors and wirings which would have got impacted, and all these OEMs, they would have taken action and they would have quickly corrected it. They are not small manufacturers to let it go, and there are penalties for this tenders. There are penalties if they are not operated for certain minimum kilometers. So they will definitely take action and that. So I think there is one more question about fraud happens in fuel filling and bunks. So like that, how to find out frauds in electricity charging. So all the electricity charging is almost automated. So it's on the app driven only. So even if you can see most of the fast charges in the highway or petrol bunks are unmanned. So you go there, connect your app and then connect it to your vehicle battery management system and the charger system. They connect each other and interact each other, and depending on the battery capacity, depending on the battery's capability, they keep charging, and you can choose either for so many units percentage charge, or you can charge it for certain amount of rupees. There are options available. It's online, so the owner also can see how much it has charged, how many units it has consumed, and the charger manufacturer also can see. So everything is transparent. Here the chances of doing fraud is limited. That's one of our challenge what we came across when we were talking to the drivers. So in some of the places, the drivers manage to get certain money by saving diesel legally or illegally. That cannot be done here.
Um, I would like to answer the question from Kapil. Kapil, very relevant question. I would try to break down all your points and try to answer, and including what has been done. What Arun also said, a lot of things are because of the way the bids or contracts are being framed. Okay, the first thing, as you said, 577 breakdowns. Okay, or 100 breakdowns a month or so. When we talk in absolute number versus when we talk in percentage makes a difference. 100 breakdowns per month is almost 6%, though we consider it as a high. High in terms of the tender, the limit what has been given to them is 5%. In any bus operation, you always keep 5% of your fleet to have a basic maintenance, time to time, their maintenance or their uh, breakdown management plan. So this is just a percentage high. Instead of 5, that is a 6%. Globally, good practices also maintain 4%. When the earlier the Karthik sir was saying, he gave an example of the Ukraine or Iran war, that is the same thing which is happening. Did we try to map what was happening in the ICE buses, the combustion fuel? Because there, the percentage breakdowns were almost 10%. So if we talk in terms of percentage and we try to compare the two, we will actually identify who is doing better. First point. Second point, yes, the breakdowns are there. Maybe 60-65% have been identified related to batteries. The reasons have been a way different. The buses which came at the initial phases or few years earlier, the kind of a battery technology or what it had was, or the tenders what it demanded was, the earlier tender in the FAME, they were asking, I want this much of a battery. They were not talking about the kilometers. Later, it also came to the kilometers. So when we are asking a battery, the size specific in the earlier FAME tenders, what was happening? City did not know about the technology and how the battery will degrade. The OEM knows better. The recent tender, when it translated to Grand Challenge or NEBP, they asked about the kilometers. They said it is your battery. You have to design. You want to give 240 kilowatt hour battery or 300 or 360 kilowatt hour battery. Based on your energy consumption, your technology, your degradation, you plan and send it to me. That was a first change. The second change what came was, when these buses started coming on ground, they found that initially they were passing all the tests. They were coming on ground, doing the pilot very good. They were able to cover those kilometers. But when they were covering the kilometers, after a couple of years, the battery was degrading. What happens with your laptop battery or mobile battery? The battery degrades. So the test and the pilots were done for the year 1. Because the earlier tender talked about they have to pass the test, the factory test, which happens at ARAI, all the certification, homologation, and the pilot test. Over the years, they would be given opportunity charging and XYZ type. This also happened because the tender had asked for AIS 040 test, which said that the battery range will be tested in the certification by the certification agency for half a GVW, that half of the passenger capacity without AC, XYZ in a lab conditions. So it had to pass those tests. So in the recent tender of PME Bus Seva and PME Drive, this ground facts practices were mapped and rectified as that even if you do AI 040 plus 100% GVW plus AC would be on, and that conditions will be mapped to those extent. So those tender conditions have been changed. So it is expected that now the batteries they are providing will be a way different. In the recent tenders or the delivery, what you will see, there are two types of operators. One who are providing a battery of 240-250 kilowatt hour for 180 kilometers, and also an OEM who is providing 363 kilowatt hour battery for 180 kilometers. Their total business model is different. The first OEM is looking for, I will save cost on battery. I will try to optimize that and give exact 180 kilometers. Day 1 or day end, because the contract says till the last day, you have to ensure 180 kilometers on ground with 45 minutes of an opportunity charge. The other OEMs, his business model is different. where they are saying that I will give an extra battery. 180 is a minimum kilometer to be operated, but no one is stopping them to operate for 225 kilometer. So they will earn the extra battery cost over the kilometers they will operate, the extra kilometers they will operate. So over the years, two things have changed. The kind of a testing, what bids have demanded, the kind of an guarantee from changing from first day of operation to last day of operation. So those tender conditions have changed. And there are two kind of an OEMs which are learning from their old practices, that actual earning is more in running the kilometers, because it makes your bus more cheaper as you operate more and more. So they are also understanding this operation game and providing it. So when we say the breakdown, what happened in BMTC or the news article what you have referred is only 6%. Number one, breakdowns never means that batteries are bad or getting malfunction. It is that they are not before they are completing their 200 kilometers, because of traffic conditions, because of overloading, because old tests have not demanded that kind of a range certification, they are not able to complete that 200 kilometers. So that is it. I hope that makes
Thanks, Chintan. I think that was quite comprehensive. We are at 2 hours plus, and we still have 135 people online, right? Which means the topic is super interesting. I mean, I would maybe take one more question for Selva sir, if you're still there. It's a breakup. The question is, as cost accountants, we would like to know how cost is rolled up to arrive at a price of 1.36 crores for EV. So I assume he's meaning EV trucks. And which component is the major cost component in the total cost? So maybe, sir, if you can answer this.
Yeah, so simple answer is 50 to 60% is from battery. If you look at the aggregates for cost build up in diesel engine driven trucks, the steel structure it is same for both electric or the diesel truck. Cabin is same for both. The axles same for both. The suspension system is same for both. Brake system is same for both. Air conditioning system is same. Your power steering system is same. AC for cabin is same. So the difference comes in diesel truck. What we have, engine, then gearbox, clutch, and then it goes to the axle, and it has got a cooling system. This engine, clutch, gearbox is removed from this truck, and we are bringing in the motor. So motor does the job of transmitting the power from electrical energy to the mechanical energy. The heat generated in diesel also has got the cooling system, radiator, coolant, all these things. Here also there is a cooling system, same. But for this brakes, AC, everything, earlier they used to draw power from engine. Now there are separate motors, small motors for each of the aggregates. So for driving air conditioning or having a brake, supplying air pressure for brake or for driving the cooling pump systems and all. So there is going to be small motors for that. The major difference comes here is earlier there will be only diesel tank. It's a steel structure and it will take say 1,000 liters of diesel. Here the entire battery is imported and the battery is the big cost element here. So that's about 50 to 60%. That's how the earlier like our mobile phones. Initially the price were very high and slowly it came down. Like here also, the lithium batteries prices were very high, and I think now in the last 2 years time it has come down and it is stabilized. So here other one thing is like if you want to operate for longer range, then you have to go for a higher capacity batteries. Higher capacity means you have more number of battery packs. So if you keep adding battery pack, then there is a cost increase. So that's why we look at the trade-off on that. What should be the range we expect, and go for a project-based evaluation. So for this project, for how many kilometers it is going to run in a single trip, how frequently, how much kilometer per day it will run. Depending on that, we have to go for we have to select the battery capacity. Suppose if you need only 100-kilometer run per day, you don't have to go for a 450 kilowatt hour battery, and it's overkill. So we have to look at those things to optimize. So it's unlike diesel trucks, you buy the same standard truck for 100-kilometer run also, or 300-kilometer run also. But in these cases, because of cost is going to be on that battery capacity, we have to be very judicious about what capacity we are choosing and what application, what use case we are looking at it. I hope that answers this question.
It should, sir. I think he had said thank you, sir, for the teleprompt response. Okay, thank you so much. Now over to Sharvari, finishing lines.
Thank you everyone for being so patient. We understand that this topic becomes little bit technical sometimes for non-technical, like for non-engineer people also, but we loved the way in which questions came in, and this arrangement was also a bit little new for us, because typically we are habitual to have all the participants in the same call where they can just raise the hand, unmute and speak. But I think this worked. I think this is something which have worked for us. So thank you so much, the chapter who have arranged this, and we are extremely happy. In case of there are any follow-up question, you have our email addresses. Please let us know how we can contribute to spread this awareness and become the enabler for electric mobility transition for the country. Thank you so much.
Thank you, ma'am. I also thank Arun Krishnan sir, who is the pioneer of making this happen in this online forum. And I also thank Sharvari Patki madam for her session for today. I also thank the other speakers for today, Karthik, Atmanathan sir, K. Chandana, Anu Shruti Kundu, Mageshwari, Kapil Kumar, Selvarajan, and others. And we also thank our BFSI board, the chairman of BFSI board, CMA Chittaranjan Chattopadhyay sir, who has always been the pioneer in making such events in an online forum, and has given the go-ahead in spite of having a busy schedule. He could not make it today. I hope next session sir will be present. We also thank our team, BFSI, Roop Biswas and Shantanu Pradhan, for their support and cooperation. We also thank our other CMA council members, our president, vice president, who has approved this session in this online forum. Hopefully, we will catch up in the coming days and with a better session. And I hope our members also will like today's session as a start. And we will be going ahead with many other programs with WRI. Thank you all for participating.
Thank you, guys.
Thank you, everyone.
Bye-bye.
Thank you. Thank you.
Sujay Kundu, you can close the session.